Hey, you made it this far. You're probably going to go and read this entire article down below, but this is a summary with Sonny. In this article, and if you don't feel like reading it, here's what it's about.
Let's talk about something that doesn't get said enough. Being underwater on your mortgage doesn't mean you're out of options. If you owe more than your home is worth, it can feel overwhelming, like you're stuck with no way forward. But here's the good news. In 2025, Sacramento homeowners have more tools than ever to refinance, reduce payments, and even start building equity again. You don't have to sell, you don't have to default, and you definitely don't have to give up. So what does underwater refinance really mean? It means that even if your loan balance is higher than your home's value, there are still programs designed to help you. For example, if you've got an FHA loan, you may qualify for a streamlined refinance. No appraisal required. Veterans with VA loans can often use the VA IRRRL, which also skips the value review. And for conventional loans, Fannie Mae and Freddie Mac have a high LTV refinance option. That's basically a modern version of the old HARP program, built specifically for homeowners in your situation. If your finances don't fit the standard mold, maybe you're self-employed or your income looks a little different on paper, non-QM loans are also an option. These flexible programs can give you a path forward when the big banks say no. The key is this: you've got to be current on your payments. Most programs require at least 6 to 12 months of on-time history. Your income and credit still matter, but the fact that you're underwater doesn't automatically disqualify you anymore. Let me give you a couple of examples. We helped a couple in Antelope who owed about $23,000 more than their home was worth. On paper, they looked stuck. But with an FHA streamline, they lowered their monthly payment by $376, rolled in their closing costs, and didn't even need a new appraisal. Another homeowner in South Sacramento, a veteran, used a VA IRRRL to cut his rate by over a full percentage point and shaved 5 years off his loan. These aren't rare cases. They're real people using smart refinance programs to get unstuck. So if you're underwater on your mortgage, here's what I want you to remember. You're not alone, and you're not stuck. With the right strategy, you can lower your payments, start rebuilding equity, and take back control of your financial future. At Kees Lending, our motto is simple questions deserve simple answers. We'll walk you through every option available, even if the big banks told you no. So if you're ready to see what's possible, head over to keeslending.com or give us a call. Let's find the refinance solution that works for you and get you back on track.